think the fiscal expansion which is being discussed is a significant one. So according to our estimates, if you look at the CBO projections pre-election, they were already projecting 6% plus fiscal deficit for the next 10 years. But given the policy matrix or policy proposals which the incoming administration is talking about, and given you have a unified Congress, that fiscal deficit can go beyond 8%. So that is a very significant expansion on top of an economy which is still quite strong, tracking above 3% currently. So for 2025, we think reflation can certainly be an outcome if the tariff policy is more moderate than the rhetoric has been.
Right. Let's talk about the Fed, because the recent comments from Fed officials has been a little bit vague, really. They're saying, we'll keep an open mind, but looking at the market expectations at this stage, chances of a cut are still quite high. What do you think is going to happen, and why do you think they're providing us with this vague message at this moment?
So I think if you look at the trade policy uncertainty in the U.S., fiscal policy uncertainty in the U.S., it's shot up. Unless till the time that the new administration comes in, clarity starts to come into play, that will have a meaningful impact on monetary policy trajectory. So I think it makes sense to hedge your bets right now, because the economy currently is still quite strong, as Chair Powell said yesterday. So, and then wait for these big policy announcements on the fiscal and trade side to come into play before you calibrate the next steps as you go through the cycle.
Interesting. I would also like to get your thoughts on the chances here of tariffs, because yesterday when we heard from Jerome Powell, he said, we can't really factor in what we don't know. We don't know by how much, whether there will be retaliation and so on. But when you read some of the comments out there looking at, for instance, the importance of Mexico for the U.S. consumer, is there a risk here that we'll be seeing the U.S. importing inflation going forward?
So I think tariffs by construct it can potentially give a price level shift up for the US, because that's the entity, if you will, applying those taxes, if you will. But I think whether they turn into a more significant inflationary force depends on a number of factors. And one of those important factors is how the Fed will respond to it. Yeah. So I'm not surprised that Chair Powell is talking about those things, because a lot of that is election rhetoric. A lot of details need to be calibrated, and monetary policy will have to wait in this case for specific details and implementation to come through, because you can jump the gun on something which doesn't pan out, right? And that's a very risky policy.
So let's talk asset allocation. Given all of these dynamics, tariffs, a Fed, the new president, what are your top convictions for next year?
So we are in the reflation camp for 2025. We think that nominal GDP growth in the US will get another boost, both from inflation and from real growth. But that's our base case. However, the risk profiles around that base case is now very different from a year ago. Now we have to be more concerned about stagflation as a risk scenario rather than recession, because we think for a recession to happen, the Fed will have to become very, very hawkish. And we don't see that happening till later in 25, when there's much more clarity. So the risk profiles are more focused on inflation once again, after talking about the labor market for the better part of 18 months.